Welcome back to Indianomics. From India to China now. Last week, the yuan depreciated suddenly by 1% in a single day. Normally, the yuan moves barely 0.2% in a day, with the Chinese PBOC, the People's Bank of China, setting the daily band of movement for the currency at 0.2% gap. Now, does this depreciation of last week indicate that China is worried about its slowing growth? A large part of the slowdown in China has been because the yuan has appreciated steadily at a compounded annual growth rate of 3.5% since 2005. And that clearly now has begun to dent Chinese exports. But this has tied in with China's long-term goal of shifting away from dependence on exports to fomenting domestic consumption. But now with the yuan suddenly depreciating, should we start worrying whether China is rethinking its strategy? What should financial markets expect out of the world's second largest economy in the current year? CHETAN AHYA is still with us, and two more emerging market fund managers join in, ARNAB Das of Rubini Global Economics and Richard TITHERINGTON of JP Morgan. Gentlemen, welcome. Well, let me start with you, Arnab. Why did the BOC allow such a sharp depreciation of the yuan last week? Should we expect more of this?
I think there's a variety of different things going on. One is that the devaluation is being used to discourage hot money capital inflows. Two is, as you suggest, to put a little bit of a tap on the accelerator to regenerate some steam in the slowing economy. But against that backdrop of trying to promote exports and discourage capital inflows, the underlying kind of policy theme that the Chinese authorities have recognized, that they must rebalance the economy away from net trade, really exports to the West, and the United States in particular, and away from very heavy investment and construction towards consumption. That theme is also there. I think what they're grappling with is that transition is difficult and it involves significantly slower growth. And at the same time, the process means that the accumulated stock of directed credit, which is turning into bad loans, will be a problem. So they don't want to have an avalanche of that problem. So if they can keep a bit of the investment process and a bit of the export process going, they can help manage all of these things a bit more smoothly than otherwise.
Well, that's a lot of issues you're raising, Arnab, but let me stick to yuan depreciation. Richard, how have you read the depreciation of the yuan last week? What caused it, you think?
Well, I think that the PBOC, the Chinese Central Bank, was a little bit concerned at the extent of the flows into the yuan, particularly the offshore yuan, the CNH. And I think what they want to remind people is that the currency can move in two directions. So it's not a one-way bet. So I think that the weakness that you've seen, whilst it's made the market very nervous, is more likely to be a transitory thing rather than a fundamental change in direction.
So, Richard, what you're saying is we should not interpret this depreciation as a means whereby the Chinese are trying to get back some export markets because they're worried about slowing growth. No, that's not how you're looking at it.
No, I don't think that's likely, and that's certainly not our base case.
Okay. Chetan, you heard Arnab and Richard, your spin on the depreciation of the yuan last week.
Yeah, I agree with the previous two speakers, Lata, that this is essentially aimed at checking the speculation on one-way bet. Also, as you would know, that China's current account surplus has narrowed quite significantly now. It's about 1.8 to 2% of GDP. So to that extent, they need to get the market prepared for a two-way movement. It's no more like a huge current account surplus, which means that they have to continuously appreciate. And to ensure that the market gets enough notice on that two-way movement, that's why they have engineered this intervention. And the fact that this is engineered by them is also reflected in the fact that the interest rates in the interbank markets have collapsed quite a lot. So if you look at other emerging markets, currency used to depreciate with lack of confidence, and the interest rates in the domestic market used to also move up. In China's case, the interest rates are going down. So this is definitely done with a lot of control by the central bank, and I would say that it's really targeting the speculators.
So Chetan, in that case, what's your call on the yuan's trajectory? Will it be at 5.9 at the year end? Appreciate from 6.1, or will it depreciate from 6.1 to 6.2 by in 2014?
Not really, Lata. We are in our base case thinking of it's moving down to 5.9, but we must caveat that it will be dependent on what happens to the exports. If exports really weaken a lot, they're right now growing at close to 5 to 8% year on year. But if they go to zero or start contracting, then I think they might change the track in terms of where the currency goes. And the second issue is more related to the risk factor, which is that China is trying to engineer a soft landing in its credit bubble. The credit to GDP number is at right now 240%. And when they're trying to slow the credit growth, it is always going to be very, very challenging in terms of the way they get the response from the domestic market and growth data points. So that's the other thing that we will watch, the response of domestic demand to tightening of credit they're implementing.
Okay, let me take this bad loan problem you're raising to Richard. Richard, shadow banks or non-bank finance companies and their bad loans, as Chetan just said, is becoming a huge problem. One wealth management product just bombed recently. How do you assess the problems for this sector and their impact on financial markets?
Well, clearly, over the last few years, credit has built up very substantially. And as the authorities have tried to control that credit growth, you have seen the rise of wealth management products, shadow banking, and other forms of unsecured lending. And clearly, I think the authorities are worried about it, and clearly they are trying to crack down on it. I think you will see bankruptcies. I think you will see individual companies and lenders getting into trouble, but I'm not expecting that crackdown on shadow banking to have a major systemic impact on the overall economy.
Chetan, your analysis of the Chinese bad loan problem, both from banks and non-banks.
Well, Lata, I think there are two issues there. One is the fact that the credit has been delivered in form of non-bank loans, which is about 50% of the total credit creation that is happening right now in China, which includes wealth management funds, trust funds, interbank loans. So all of these other sources are actually somewhat less structured, and they pose a risk to the financial system. But the more important issue is the overall credit to GDP, which is also quite high, and the concern that we have is that the pace at which credit to GDP is going, it is unsustainable rather than the level of credit to GDP. So the policymakers are right now cognizant of that and are trying to slow the aggregate credit. So I would say there are two issues there. One is the structure of leverage, and the second is the pace of leverage. And to the extent to which they are trying to work on it right now, it will pose a risk to the growth story in China. And we've seen that with what happened in US, what happened in Japan in the early 90s. Whenever you try to control that credit to GDP, it tends to be a very difficult moment because you tend to see a growth slowdown as well. So how do you delever when growth is slowing, and at the same time you want the credit to slow as well? So it's a very challenging phase that they are going through. So we'll be watching about on the risks on this whole deleveraging in the corporate sector that they have embarked upon.
Oh yes, of course, one understands that pain even in India. But Chetan, let's tie all this with Chinese growth. China's last GDP number was 7.6%. What's your estimate of Chinese GDP growth in 2014?
So right now, we've got it at 7.2%, which is below consensus. As you know, everybody is talking about 7.5, 7.6. And for near term, I think they will still be able to deliver this 7.2% GDP growth for 2014. But we've just highlighted in a sort of more thematic report on leverage on Asia is that China is the country which has a downside risk to the medium-term growth outlook, which consensus has at about 7%. And that is because not only that this leverage issue has come up, but there is an aging population problem as well. China has started to see decline in its labor workforce, and at the same time it is going to see a rise in age dependency, which is going to be an additional challenge to maintain that 7% odd growth rates.
Okay. Well, Richard, CHETAN says 7.2% GDP for the current year. Consensus, as he says, is still standing at 7.5 to 7.6. Do you think Chinese growth can be significantly lower?
I think when you look at 2014, growth might be lower than the consensus is currently expecting. But I think that there's a big difference between growth coming in below 7.6, somewhere closer to 7, and growth coming in significantly lower than that. I think the chances of growth coming in significantly lower than that are actually quite small.
Okay. Arnab, on another issue, do you think there could be some financial accident out of China in 2014 that can waylay all emerging markets?
Well, I think, at some point, China will have a financial crisis, and that will precipitate a significant slowdown in the trend growth rate of China, right? Now, I'm not trying to forecast that 2014 or 2015 or 2016 is the year of that crisis. But I think what is happening is that the Chinese trend growth rate is in a transition from a very high and unsustainable rate to a lower and more sustainable one. It's still, fairly high and probably still at a quite unsustainable rate of growth at the moment. Now, this rebalancing that we were discussing earlier from net trade and investment to consumption, that will necessarily entail a significant slowdown in the growth rate because consumption is such a small share of GDP that you can't have it generate the same growth just mathematically without having either a massive increase in household income or a massive increase in credit to the household sector. Now, the latter is not going to happen because we already have a credit problem, and the former is quite unlikely to happen because what's going to cause that? It's not obvious, right? So I think one way or another, we're looking at a significantly slower growth rate than what we have been used to in China, and that's already been happening for a period of time. Before the crisis, the growth rate was in the low double digits. Since the crisis, it's been in the high single digits. It's transitioning towards the mid-single digits and eventually the low single digits because it's becoming a richer, more mature economy. It's not there yet, but there will be a crisis at some stage. No country has been able to escape financial crisis, particularly no country that's had a growth boom and a so-called miracle.
Well, that's a dire prospect. Richard, what is your take? You see a financial accident out of China this year or next?
I think as long as the Chinese government has very significant foreign exchange reserves and runs a current account surplus, the chance of a major financial accident taking place in China are pretty small.
Well, that's an interesting contrary view. CHETAN, which side do you swing? You expect an accident?
I agree more with Richard in the sense that the policy is pretty much in control. What you will see in China will not be something what you saw in the US. You will probably see the involvement in the credit bubble in China more on the lines of what happened in Japan. So it won't be an explosive effect because they have current account surplus and they have a lot of FX reserves. So they will settle for lower growth almost at their own terms and not really being forced by the external forces like what's happened in other emerging markets, including India recently.
All right, Richard, CHETAN and Arnab, thank you very much for joining me in this discussion. Well, the Chinese are in control of their own slowdown process. That's at least the majority view, if not the consensus view from our experts. Thanks a lot for joining this edition of Indianomics.